So today, I want to give you my full thoughts on the crypto market. No fluff. I just want to get into what's actually happening right now and the reasons why I think the market has fundamentally changed. And because of those reasons, what my personal strategy is heading into this next period in crypto. I haven't uploaded in the last few days because I've mostly just been reflecting, talking to people. I've had lunch and dinners with VCs and big crypto whales to understand their thought process. I've also been catching up on a bit of research into stuff that I normally wouldn't have time to do. And because of that, I feel like I have a new refreshed set of eyes on the market. And I've used this period to refine my strategy down and my approach heading forward. So I think today's video will be a really valuable resetter for you if you're feeling slightly lost or you haven't fully updated your crypto strategy. I think some of the points that I'm going to make today are going to really help you heading into the next couple of months in crypto to not only survive the storm, but actually become profitable in this market. And pretty much the structure of today's video is going to be pretty loose. I haven't written or planned many notes as usual. I'm going to be going off the cuff a little bit more and discussing A, why this cycle is different from others, B, what we are likely going to see in terms of price action and trends over the next few months, C, my strategy for the foreseeable future and how I am basically maneuvering this next little period in the market and what my mindset is. So without further ado, let's get straight into the video, beginning with section number 1, why this cycle is different from others. Now, in my opinion, I don't believe we're in a 4-year cycle anymore. Now, at face value, you might think, oh, this is super controversial. Like, of course we're in a cycle. Look at, the Bitcoin price action. But I've kind of had this opinion for many months, but I think it's just become really clear recently that the dynamics at play have completely altered the dynamics of what used to be a pretty standard 4-year cycle for Bitcoin. Let me explain exactly why this is the case. And in my opinion, there are two reasons why we're not in a 4-year cycle anymore. Two reasons which are, I think, over and above the most important reasons why you should probably shift your thinking away from the 4-year cycle, because I think it can end up getting you a little bit trapped in the market. Reason number 1 is something I don't hear many people talking about, but it's fundamentally the main reason I think why we're not in a crypto cycle anymore, but this specifically pertains to Bitcoin. And that is the fact that the issuance of Bitcoin, every time it is halved, the relative halving of that issuance becomes less impactful on the overall supply of Bitcoin. So if you actually look at the Bitcoin halvings, so the 2009 to 2012, 2012 to 2016, 2016 to 2020, and the most recent one, 2020 to 2024, of course, in April 2024, we had the halving. You can see that the new Bitcoin issuance halves every single time. That's why it's called the halving. But obviously, because new issuance is halving every single time, that means the importance relative to the rest of the market also gets chopped in half. Because the impact back in the day of going from 10.5 mil new issuance to 5.25 mil, that was massive. 5.25 is a quarter of the total Bitcoin supply. But now 1.3 million on a relative basis, especially compared to a lot of the demand side factors that we now have that we're going to discuss today, it's much, much smaller in terms of its importance. And as time goes on, it becomes even less important. 700K, then 300K, then, 150K, and then less and less and less and less until eventually the new issuance for Bitcoin is essentially zero. And we know it tapers off over time into, I think, the year 2144. But obviously, every single halving now, its importance is halved. So this is the primary reason why I believe we're not in a 4-year cycle anymore for Bitcoin. It's because the halving used to have a really important effect on Bitcoin supply. Now it doesn't have such an effect on Bitcoin supply. The second reason why I don't think we're in a 4-year cycle anymore is because of the major demand side factors that we're getting. The number one being the institutionalization of Bitcoin via the Bitcoin Spot ETFs. I don't think you can underestimate the impact that the spot ETFs have had on the market. And in terms of Bitcoin price action, they are a very good thing because we have seen insatiable demand for Bitcoin through the spot ETFs. And this has really changed the game. It's meant that Bitcoin is becoming more institutionalized. People are now investing into Bitcoin like they would an index fund through the stock market. And it means that a lot of the capital that would previously go on decentralized exchanges is now entering Bitcoin through the ETFs, which fundamentally has changed the wealth effect of the market. It is one of the reasons why altcoins aren't performing like they did last cycle relative to Bitcoin's price performance. But it does make sense that we are now entering a new paradigm for Bitcoin now that there's all this institutional interest, now that there's all this new retail interest through the ETFs. It makes sense why we aren't in a Bitcoin cycle anymore, because there's so much more demand relative to the supply side decrease through the Bitcoin halving. And fundamentally, these two factors together, the major supply side factor, which is the halving, and the major demand side factor, which is the ETFs and the institutionalization of Bitcoin, in my opinion, has killed the 4-year cycle. Now, as it pertains to altcoins, there is a tangible effect that this diminishing importance of the 4-year cycle has had on the altcoin market. And the main trigger for this is a point I touched on before, and that is how the ETFs have changed the wealth effect of the crypto market. So what used to happen, right, in 2021 and in 2017 is a lot of rich Bitcoin whales, they used to purchase Bitcoin on centralized exchanges. Bitcoin would go up a lot in price because you had the Bitcoin halving. So these whales were now in huge amounts of profit. So they were feeling greedy. It's like being at a casino. You put $1,000 on the roulette table. All of a sudden you have 36,000 because you hit a number. Well, now you're betting more aggressive. Your next spin, you're not putting 1,000, you're putting 5,000 or 10,000. You move up the risk curve, you take on more risk. That's the exact same thing that used to happen in crypto. So people would buy Bitcoin on centralized exchanges, they would have a bunch of money and a bunch of profits on these exchanges from Bitcoin going up. So they would gamble with that money. They would rotate down the risk curve, put it into Ethereum, then into large caps, then into alts, and the majority of pumps weren't happening on-chain. The majority of pumps were happening on centralized exchanges in 2017, and especially in 2021. And there was also factors like quantitative easing, which were impacting the market in 2021, resulting in this huge altcoin season. But what the ETFs have done is they've fundamentally changed wealth effect in crypto, because you no longer have a bunch of rich whales on centralized exchanges gambling on altcoins. You have institutional players and retail who are accessing these Bitcoin ETFs, getting really rich, but now their money isn't on centralized exchanges, it's in an ETF, it's in their stock portfolio. So it doesn't make sense for these people to move down the risk curve on altcoins, because you're not trading BTC Solana pair, or you're not trading the BTC Ethereum pair. You're trading Bitcoin ETF versus USD. So you're going to settle back into USD if you do choose to take profits on your Bitcoin ETF position. If anything, there's a higher likelihood people invest that money into something like the S&P than going into altcoins. So what the ETFs have done is they've killed the wealth effect in crypto. The other factor here is that a lot of the Bitcoin whales are already exhausted. So there aren't many new Bitcoin whales in the market that have made a lot of money this cycle that are now gambling on altcoins, because anyone that already wanted to take profits on Bitcoin has already had a chance to go into alts. And every single cycle, because of the law of diminishing returns, wealth effect diminishes because the Bitcoin whales are making less, right? And what we've found over time is that more and more people are kind of skipping the OG flow of funds that we've seen, and they're just entering straight into the casino. They're not buying Bitcoin first, getting rich, and then moving down the risk curve. They're just going straight into the casino. And a lot of that capital is now gambling on chain. So this is why this whole alt season flow of funds that you've probably seen in front of you and became really famous, the reason why this isn't true anymore is because of the fundamental changes to how Bitcoin whales are behaving, and also where people are buying Bitcoin, and the people that aren't buying Bitcoin, what they are choosing to do. And what they're choosing to do is this. They're going on to pump fund, they're going on chain, and they're gambling in the casino. So what I think is happening is there's like a disconnect right now in the market. There's Bitcoin, which is now a more institutionalized asset, and an asset that, you know, BlackRock and all these major funds are very interested in. And then there's altcoins, but it's the altcoin casino now. So either you're in Bitcoin and you're only in Bitcoin, or you're completely gambling, the majority of which are going onto Solana and the majority of which are gambling on chain. The middle ground, which used to be the centralized exchange altcoin market, all the major altcoins, they're not getting so much love this cycle because they're pretty much entirely being skipped. Either it's risk on season on chain, and there's lots of stuff happening on chain, or people are just buying Bitcoin through the ETFs. And I'm sure some people are buying on exchanges, but as I said, because of the law of diminishing returns, they aren't in huge profit, so they aren't rotating their money down the risk curve anymore. And the change of behavior from speculators in the market has become very clear because we have seen an increase in stable coins in the space. So there is liquidity coming into the space, but that has coincided with a huge increase, as you can see in front of you, in the new daily active addresses and the token launches on Pump Fund. So the entire major altcoin scene is basically being skipped. So it's creating kind of a barbell right now of like insane on-chain action and lots of opportunities on-chain and Bitcoin performing really well. But the rest of alts, everyone's asking when alt season. Well, the reason why it's not happening is because of this. The middle has been cut out in the market. It's a barbell market at the moment. And I'll get into how you can actually approach this market later in today's video because I'm going to outline my full strategy. There's bad news, which is like it's not as easy as it used to be, just long a bunch of majors and make a 10x. But there's good news because there's also lots of opportunities in the market. And there's a framework that I'm going to give you today that can actually help you take advantage of these opportunities. So if there is no 4-year cycle going forward, and I think in today's video, the points that I've made pretty much make it clear that there is no 4-year cycle, or at least there is no classic alt season, what will we see instead? Well, in my opinion, this tweet from Ansem is pretty spot on, that we actually have seen mini alt seasons in the market, but what we are now likely to experience are pockets of outperformance in the market instead of everything going up only at once. So if you actually think about it logically, we had a big meme coin season in August, September. It peaked in November, right, last year. Then we had the AI season happening at the end of November into December. Then we had the AI agent season happening in the beginning of January to mid-January. Even now, we're starting to see certain narratives cropping up that could potentially be the next narrative. We're seeing BSC gain some traction and some other on-chain niches gain some traction as well. So what is happening is every couple of months, there is a new meta. It went from memes to AI, like deep in AI, and then it went to AI agents, and now it's moving on to something else. So instead of everything going up all at once, there are little pockets of outperformance which keep cropping up in the market. And if we aren't in a 4-year cycle anymore, the market is likely going to change from like 4 years of up only to 4 or 2 years of down only, right? So 2 years up, 2 years down. It's likely going to shift away from that into periods caused by macro triggers of bearishness and bullishness. So the good news is, technically we're in an altcoin bear market right now, right? In terms of prices. The good news is, because the 4-year cycle isn't real anymore, the bear market also isn't really what it used to be. So the bear market used to be a really scary term, right? We're in an altcoin bear market. Oh my, 2 years of down only. That's so scary. Well, because there's no 4-year cycle anymore, it also means the bear trends are going to be shorter. It could be 4 weeks. It could be 2 weeks or 2 months instead of 2 years. It could be a few months. Then we might go into a few months of extreme outperformance. It's going to be like this now. It's not this predictable pattern anymore. It's going to be pockets of outperformance. And when you see the market outperform, there'll be certain narratives and certain altcoin rotations within that which really outperform during that time, and that's where you can make a lot of money in crypto. So it's just shifting your framework a little bit from like, I'm going to hold this huge portfolio and I'm going to 10x it in this big cycle and then I'm going to sell, to how can I actually take advantage of these rotations and these shorter periods of outperformance to compound wealth over time. And when the market shifts from bull to bear mode, how can I protect capital so I'm able to survive periods like now where it's tricky? But if you're one of the ones that's heavy in stable coins right now, you're probably pretty happy because now you're starting to get some good opportunities to prepare for the next period of outperformance in the market. Now, it does mean the bad news is it's a bit harder. Right? The game isn't as easy as it used to be, but this is just like every single asset class. Stocks, real estate, everything over time evolves. Now, the good news is we're still really early to crypto in the macro scheme of things. So it's relatively easy to make money compared to something like stocks, right? But over time, every single year, it becomes harder and harder and harder. And I think the shift this cycle versus the last cycle has become harder. There's also been lots of opportunities, but the strategy that you applied in 2021, you can't apply now anymore. And markets are all about adapting. If you're able to adapt quicker than the rest of the pack, if you're watching my videos and now you're adapting your strategy, you're going to do a lot better than a lot of retail who I'm still seeing are adopting this old mantra and this old mindset that is probably going to get them wrecked again this cycle. Jordy actually came on my show a couple of weeks ago and we discussed this exact topic. We discussed why it's at the moment investors' hell and traders' paradise due to the likely choppiness and volatility that we're going to see across the market. And shout out to Jordy. He was actually very spot on with some of the comments he made in the show. He was expecting downside on alts. We got downside on alts. He's been pretty spot on. I'm going to get him on the channel again soon. I had a great dinner with him the other day. We actually met up in person and we had some fantastic discussions. And I actually want to go into some of the learnings from the discussion I had with him because he made some very clear points. We talked about the cycle. We talked about strategy. And I think these points are really apt in terms of how you approach the market right now. The first topic we discussed, and now we're on with the strategy section of the video. So what am I doing for the foreseeable future? The first thing we discussed was mindset. Because before you do anything, before you buy something, sell something, trade something, invest in something, you need to have a mindset as to how you're approaching the cycle. So if you agree with me that we're not in a 4-year cycle anymore and we're seeing pockets of outperformance, right? What mindset can you adopt to take advantage of that and not get wrecked? Well, we discussed something really interesting, and that was having a compounding mindset versus an absolute mindset. What does that mean? A compounding mindset or a growth mindset is you're not looking at the end goal. You're looking at the steps you can take to get to the end goal. So here's the problem in crypto. People say, oh, I'm going to invest 10K into altcoins, then I'm going to ride this huge altcoin season, and I'm going to cash out for 50K. Or I'm going to put in 50K and I'm going to cash out for 500K. Everyone's got these crazy targets that are reliant on an up-only altcoin season to hit those targets. But instead of thinking about the end goal, like I'm going to 5x this cycle, I'm going to 10x this cycle, instead of having a profit target, instead focus on taking individual bets steadily over time, which compound wealth. So I was speaking to Jordy about his strategy, and he basically said, look, I'll never go in with more than 5% on a single position. I'll get into a position because I think it's positive EV to do so. I'll make money off that position. I'll take profits, and I'll use that to build wealth in my overall portfolio. So if you're starting with $10,000, instead of trying to turn it into 100K, how can you find one play that turns it into 11, right? Now you've turned 10 into 11. Now the next time you invest, instead of putting $1,000, you can put $1,200 or $1,100. If that bet pays off and you do another positive EV trade, now you've compounded it into 12, and then you might go back down to 11, but then you might hit a winner, which gets you to 14. So you're slowly compounding over time. This is how stock markets work. Everyone that's made money in the stock market has compounded wealth over time. If you want to have some fun, play around with the compound interest calculator. It's honestly one of the wonders of the world because compounding is so important. But just like it's applicable on a long time frame, it's also applicable on a shorter time frame in crypto. Instead of looking at like a long-term compounding goal, just focus on every single bet you take, compounding your core portfolio. So instead of holding one big portfolio where you have this target for it, like a 10x or a 5x, have a portfolio and focus on taking individual bets which are positive EV, which compound wealth in that portfolio, take profits on them, and keep building that portfolio up. And if that means sitting fully in stables and then taking individual bets with those stable coins and going back into stables, compounding again, going back into stables, compounding again, going back into stables, if that's what you need to do to execute this strategy, then that could definitely be an approach for you. Obviously, that depends on how much time you have. Personally, I'm 50-50. So my strategy is I have 50%, which is my core portfolio. These are assets like Solana, Link, some RWA stuff, a couple AI coins, which I think long-term will do really well. I'm holding these positions. I'm not touching them. These are longer-term bets. But then the other 50% is, right now it's in stables because I'm not in many active trades, but at certain times it might be in certain trades with the aim of compounding back into that stablecoin balance. Now, obviously, I'm 50-50 now. I was like 40%, I think I said on the video last week. Obviously, some of my core portfolio is down, and I've also de-risked a little bit more to get myself up to 50-50. So that's why It was 40% last week and it's 50% this week. But for me, that's my approach. I can have half of my portfolio in core spot positions longer term, and I can have the rest in capital, and I can go in and make a bet and then get out. So like I might see BSC season is picking up now. I might allocate a little bit of capital, make it 2x, go back into stables. Then in a month, I might see AI agents are starting to pick up again. I might allocate a bit of capital and then go back into stables. That's the active managing part. The other 50%, I'm not touching as much. These are long-term positional trades, which I'm using to compound wealth. Now, you don't need to do 50-50. If you have no time, a better approach that you can take is to hold a little bit more longer term and not do so much shorter term trading. And conversely, if you are really in tune with the market and you're here every single day trading, you can take more of a short-term approach and not do anything long-term. Like Paradise, he sits almost 100% in stables and he just scalp trades. I'm 50-50. I'm in between a really long-term investor and a trader because I have enough time in the market to trade, but I'm not an expert trader that I can just sit 100% in cash all the time. I still think I have an edge on the longer-term investing front. But the way you approach it depends on you. Now, if you do fall into the longer-term investing camp, and even if you have more than 50% longer-term investing, that's fine, right? You don't need to become a trader, but what you should definitely start implementing a high time frame invalidations, so at least you don't get stuck in positions as they start to break down. This is the number one thing that I've seen people get wrong over the last few weeks, is the inability to invalidate a thesis. So everyone has validations for a thesis. A validation could be as simple as buying something because you think it's cool, right? That's a validation. But you can't enter a position without an invalidation. Something else that Jordy spoke about was he had a lunch with High Stakes Capital. He's a very good trader, very big on X if you're on X. And High Stakes basically has this approach of if he feels like a trade is off, if he gets a bad vibe, he'll just cut the loss, right? He'll cut losses really quick on a sign of weakness. Now, this could be by vibe. If you're good enough and in tune with the market enough to just go off vibe, like I'm feeling bad about this, I'm just going to cut now and re-enter later. You can do that. The other thing you can do is just have technicals for it. I'll show you how to draw some technicals now. Paradise teaches this entire strategy in more depth in the Discord. But like, let's look at Tau, right? You have your range low here. You know where to draw a high time frame. So in this case, a weekly key fundamental level, because demand zones typically get tested a lot of times. So the more times a level is tested, the more legitimacy it has on the chart. And you can see this level 1, 2, 3, 4, 5, almost 6 times, almost 7 times it's been tested. It's a clear support zone. The other zone, and sometimes you have to play around a bit to find it, is the range high zone. This was a range that we're in from June to September on Tau. It was also rejected off multiple times and acted as support before the breakdown. There's also confluence with the moving average, which is the money noodle. And then, of course, you have range high, which only becomes relevant if you're looking at a price discovery play. So with an asset like Tau, if you're invested in Tau, you could have a system to de-risk at certain levels. You could de-risk a little bit on the break of the previous range high, now the mid-range. You could have a plan to de-risk the next portion at the range low, for example. AI16Z, this is another example of a trade that I took, right? But I got invalidated on because I had my invalidation as a break of this key high time frame level. So it rejected off the money noodle, which was the first red flag. I gave it a chance until we got this break here, bearish retest, another break, another bearish retest of the wick low level, and then obviously it ended up breaking down. 3 really clear de-risk signals on AI16Z, and I could give you another 50 examples of pretty much every coin I've ever spoken about on the channel. They have similar charts. Now, some coins, they go down a lot faster, so it's harder to invalidate. And some coins, they gave you literally weeks to invalidate. There were certain positions where you had like 3 or 4 weeks to at least de-risk a little bit of that position. So whether you go off vibe like High Stakes Capital or whether you have a technical invalidation, I think most of you technicals are better because if you're less experienced, vibe won't be as good. Just make sure you have some sort of invalidation, right? For a thesis. Don't take a bet and have no invalidation. So that really applies not just to the short-term traders, but to the long-term traders that have these long-term portfolios. You can have a long-term portfolio, just have a plan for if that coin is showing weakness, how are you going to exit that position? It doesn't need to be a full exit. You can play that game of just going in fully, going out fully on a sign of strength, going into that position again, or it can be a partial exit where you might exit 20, 30, 50% at certain levels. Just remember, this is very important. It's okay to cut a position and then get back in. right? If you fundamentally love Tau, you think it's going to be great, but you don't know when it's going to be great, that's fine. You can get invalidated, right? If it shows certain signs of high time frame breakdowns, and then if it starts to gain some strength again, you can always get back in and give your thesis a chance to play out, right? I think the issue is most people are a little bit complacent in the market. They don't pay attention to the signs, and then you get stuck in a position where a coin's just going down and down and down, and you're like, oh, what should I do with that coin? This can all be avoided just by having an invalidation. And okay, maybe you have to pay a 5, 10, 15% tax on your exit versus your re-entry. But it's worth paying the 10% tax in order to get in on a much stronger trend versus holding in the midst of a downtrend or a bear trend. So don't be afraid to cut your losses quick on trades and get back in as soon as they're exhibiting strength again. You might end up paying a little bit of money playing that game, but you're going to save yourself a lot of pain playing that game as well. And Paradise teaches all of this in the Discord. If you're in the Discord, go to Paradise Island, go to resources and education. You can click on any of these videos and he has full guides on each of these topics. Top-down analysis on a coin, low time frame and high time frame entries for a coin, invalidations, position sizing, all of these, we have custom videos uploaded in the Discord for you to actually learn this stuff. And once you learn it, you can go into his questions channel or any of the analyst questions channel and ask questions to actually get help executing this yourself. We've built all of these resources out for you to help you, to make sure that you don't make these mistakes. So make sure if you're in the Discord, you're actually utilizing it. And of course, if you're not already, you can join. There's a link in the description below on every single video, and you can actually get that education for yourself and get that help for yourself to become a better trader and investor, especially if we are, and I believe we are, in this environment where it's much better for traders than investors. You're going to need to start implementing at least the bare minimum tactics, like knowing how to invalidate coins, knowing how to risk manage coins and position size coins in order to come out the other side ahead. So my top 2 pieces of advice for this next period in the market are making sure you have your risk management in check, invalidations, position sizing, etc., and making sure your mindset shifts. And this is very important from this is my overall target and I want to hit a 5x or a 10x to how can I compound my portfolio with a bunch of small wins over time to get a big win at the end. Because you actually get to a big win by a bunch of small wins. Most of my wins haven't been on a specific coin. I had Ondo, which pulled massive multiples on both my seed round investment and my spot investment. I had Mantra, which pulled huge multiples on my spot investment. I had Pepe pull huge multiples. I had a few AI coins which did really well in November. Like, there wasn't one specific coin which made me rich in crypto. It was just looking back, it was really interesting to go through my portfolio and reflect on this. I looked through all my history over the weekend and reflected, what did I do well, what did I do wrong. Highly recommend that, by the way. It's great to reflect on your actions. And what I realized was, like, most of my wins, that they weren't huge. Like, there wasn't one massive multi-million-dollar win, but what there was a bunch of really decent wins that just added up over time. So, I might have gone in with 50K, 100K positions at the beginning of the cycle, but as I compounded wealth, I had the luxury of going in with bigger bets, which enabled me to make even more. So that's why compounding is so important. And that's why that mindset shift, I think, is going to be so important. Now, the hopium I'm going to give you is things are never bearish forever. If we are in this new paradigm, you're going to see a reversal from bearish to bullish at some point, possibly soon, just like we saw a shift from bullish to bearish really quickly. And there are going to be opportunities every single time that enable you to make money, especially if you are a little bit more active in the market. BSC is an example. We're seeing a lot of money bridging to BNB chain right now. We're seeing some coins absolutely explode. This coin did huge multiples the other day. And this is an example of like a trade or a narrative that's cropped up over the past few days. Yes, they move quick, but I think you really need to be paying attention to what are the hottest narratives and what are the hottest trends and making sure you're playing in the playgrounds which have attention on them. It's really an attention game. If you're able to get in towards the beginning of a trend shift, and that's something I'm going to be doing a lot of in the Discord over the next few weeks and on the YouTube channel as well, actually identifying some of these trends, and helping you guys get in early into these trends. There's lots of money to be made. Even if it's not the long-term alt season you once wanted, you can still compound every single time there is a pocket of outperformance. Pocket of outperformance, deploy, make money, go back into stables. Pocket of outperformance, deploy, make money, go back into stables. And I think it's also going to be a little bit less emotional for a lot of you because you're not going to have to deal with these massive drawdowns and these massive pumps. Taking small, considered bets over time is, I think, a much better way to approach the market. And it's basically how poker players approach the market. So I wasn't surprised to hear Jordy saying some of this stuff when I was at dinner with him because, I mean, that's how poker players think. And that's why poker players are some of the most successful people in crypto. I mean, Jose from Delphi, Hasib from Dragonfly, like all of these guys, Jordy from Selene, they're all poker players. And that's because it trains you to think in bets. It doesn't train you to think in like, oh, how do I 10x my portfolio? Poker's all about bets. What's the EV on this bet? Cool, now it's done. Independent variable over. New hand, new independent variable. I'm thinking in a bet. And it's the exact same way with your portfolio. New coin, new trend. I'm thinking in terms of a bet. Okay, last one's gone, lost money. Cool, moving on. Thinking in terms of a bet individually based on this new hand or this new coin in this instance. Cool, made money, moving on, took profits, thinking about another bet. That's how you got to approach the market. And I think if you can do that, you'll make way more money in the market and you'll also be a lot less emotional. I'll go more into content over the next few weeks about how to do this because I'm making some slight changes to the types of content on the channel. I want to go much more educational again because I felt like maybe in Q4 it was very just altcoin focused. But what I really realized during the drawdown is, despite me maybe giving good picks that went up, I probably didn't make enough content on things like risk management, which are really important for people to actually, maximize those trades. Even though they may have gone up, if you're not able to execute on a trade, you won't maximize that trade, right? So I think I'm going to do a lot more educational content, more macro guests, just more guests on the channel, different opinions, different styles of videos. Over the next few weeks, you can expect that. And maybe I won't upload every single day because what I'm realizing is I don't want to force content. I only want to bring you a video if I think it's really going to help you. So instead of forcing daily uploads, I may upload daily, but if I'm not uploading on a certain day, it's because I just don't have something good to say that day. And I think that's a good thing. I'm going to save your time. I'm going to make sure each video is worth watching and you need to click on every single video instead of, forcing content. Because something else I probably fell into the habit of doing was just forcing videos for the sake of it. And that's probably not a good thing. I think I should only be uploading a video if I genuinely think it's going to impact you positively. So that's my plan over the next few weeks. Hopefully you enjoyed this video and my insights into the market, and I'll see you in the next one. Have a lovely rest of your day. As usual, peace out.